Good morning, everybody. Today is Monday, January 26th. Here we are, pre-market analysis. Let's get right into it. We have our economic data. We have some durable good order numbers coming out that came out actually. And of course, these are in the rears because of the government shutdown again. Let's see. 0.5 on core durable good orders month over month, 5.3% month over month. Let's see if that does anything to the market right now. We are going to have an extremely volatile week in my eyes. I think Wednesday is going to be our big day. Let's see if we have anything tomorrow. You have consumer confidence at 9 a.m. Good morning, Anthony. You have Richmond Manufacturing Index, 9 o'clock tomorrow. Aside from that, I don't see anything. Tomorrow, or Wednesday rather, is the big day. Not only do you have the funds rate, FOM, you got Powell speaking at 1 o'clock, and then the press conference at 1:30. And then after that, to boot, we have earnings. So we have a big earnings week here. Today, after the close, I don't see anything that's going to be moving the market too much. Tomorrow, Procter and Gamble. I don't see anything that's really too crazy tomorrow. Texas Instruments on the tech side. Wednesday, combined with Powell speaking at 1:30. You have Microsoft after the close, Meta and Tesla after the close, IBM. And then I don't see anything else there after the close. Let's see what else you have here. You have Thursday before the market. You have MasterCard, NASDAQ. I'm not sure if that does anything or not with the NASDAQ. You got Blackstone Group before the market. Then after the market on Thursday, you have Apple, Visa. What else do we have here? I don't see anything there. And then Friday, maybe SoFi does a little something. Maybe ExxonMobil, and that'll be it for the earnings calls for this week. So we do have a lot of stuff to cover there. Let's get into the ES. If you're new to the channel, hit that subscribe button and hit that thumbs up button and like this video. So we are in a consolidation period here right now. We did not quite close this gap down from January 16th. So there's still a little room on the upside here. So we could push up to that 69.79.5 level. And then maybe when you get a little resistance and pull back, I would say that you could get some resistance up at that Friday high from January 23rd at 69.64. If we do push up once the market opens, maybe get a little resistance there. You can see how we've rejected it on Thursday and then on Friday, and then we pull back. I do have some things that are marked down here in this kind of like yellowish color here. I have these marked down as like speed zones. So this is when Trump came out on when he was in Switzerland, and he announced that he was taking the tariffs off, and this created a big speed zone. It was just a straight squeeze up with no sellers in there whatsoever. So what happens here is that there's short coverings along with new positions. And then what happens here is now if the market pulls back, these long positions here will have to rethink their positions. And then if the market starts to pull back in there, they may have to start covering their long positions here. And then it reacts in the same manner as it did on the squeeze up on the way down here. And then if you lose that 68.99.5 level on the downside, you come down to this lower regressional trend line at 68.87.72. If you lose that, you go to 68.86.75. And if you lose that, I don't see I don't see a lot of support below that 68.66.75 level to come back down and test the September 2025 highs. It's 68.14.5 level. And then if you lost that level, you come down to December 2025 highs, 67.71.5 level on the downside there. So, but if you do get that push up today, which I would be surprised if you do get, a good follow through today. I think most of the action is going to come through on Wednesday, leading up to Wednesday, if anything, and then kind of get that pin pulled out of the balloon there on Wednesday after Powell speaks, and then you get some earnings reports, and then the earnings calls, which will move the market once the CEOs and CFOs start speaking from the Mag 7, letting you know their vision and their outlook for 2026. So I would say you're going to be in a range a little. You could be in a range here between 69.35 and 69.79.5 today. If you break either of those levels, I would look for, like, if you break the 69.79.5, I would look for upside 69.94. If you break that, I think you go to the previous all-time highs at 7,014, and then to that midline regression trend line. These are the same levels that I've had up here for weeks. 7,027.95. Nothing has changed. We are just pretty much trading in this channel here, this consolidation channel. It's kind of a waiting game happening here. And then the same thing on the downside here. These same levels that I just went over here. You need to hold these levels. You need to hold this January 22nd low of 69.25, 62. If you lose that, come down to 69.0875, and then 68.99.5 for some support. If you lose that, you think you quickly come down and test that 68, 66, 75 level. And then if you lose that, I think you're gonna quickly move down here to that 68.14.5. Let's get over to the NASDAQ. Again, if you're new to the channel, hit that subscribe button and also hit that thumbs up button and like this video. The NASDAQ's getting some decent push here. So the NASDAQ, we did close this down here, that gap down. Let's get this. So the gap down that we had, from January 16th, that's all closed. So you can see here, when we gap down here, we created that huge gap down. And then I said that these gaps close. It's just, you never know when it's going to close. So that 25,006, what was that level? 25,684 level was that level, and we closed it, right? So here we are now. I think we're just kind of hovering right at that level there. So I would not be surprised if you get a little downside from right now. You did have a high, weekly high from October of 2025 at 25,815. We hit that. We rejected it on Friday, and then we fell below January 22nd high of 25,731.75. So if you, in order for us to push higher today, we're going to have to regain those levels. This first level here of the Thursday's high of 25,731.75. But we're kind of trading in this channel here as well, between Wednesday's high here, when Trump came out with the tariffs as well. So the same thing here on the NASDAQ that I have down here. This is a speed zone. If we lose these levels here, so if we lose the first thing when the market opens, if we lose this 25,653.5, I think we come down to the 25,566.57 level. If we lose that, I think we come down to this initial gap down level that started from January 19th at 25,471.90, and that is the lower end of this regressional trend line. So this may not be a bad level to think about taking a long if you were doing that. If we do lose that level, and then we come down here to this 25,418.47, that's going to be a key level to hold. If we lose that, this is the speed zone that I was just speaking about recently, where we had that straight up move and it squeezed up higher, and then you have the short coverings along with new long positions. And then these, if we get down and we lose these levels, these the new positions that were created here on January 21st will have to rethink themselves, and then may cover themselves quickly to get down here to the September's highs of 25,270.75. And then if we lose that level, then we go down to 25,125.25 rather. So those are both the upside and the downside moves for today. Again, I think that you're probably going to chop around between for today and to Wednesday, so you get a little direction there. And then on top of it, I also heard something today, and I'm not sure how true that is. The Supreme Court is probably not going to rule on the tariffs until the end of February, so that's not good. You need to get some direction one way or the other. I think a ruling is more important than what the ruling is going to be. And because the market just does not like uncertainty. So between that happening and then now there's some turbulence again with Canada, because Canada is trying to, over the weekend talking about striking some sort of a deal with China, and now Trump talking about 100% tariffs on Canada if they strike a deal with China. So I think it's a big posturing moment right now that's happening right now between the U.S. and Canada, and I just don't think that's a very good position for anybody right now. So anyways, let's get into Tesla. Again, subscribe to the channel if you're new and hit that thumbs up button and like this video. Tesla, let's look at our point of control levels that we have open right now. We still have this point of control level that's open from January 5th, 455.09. That level is still open there. You saw that on Friday. You did try to pop higher. You got above this September highs at 450.98. And then we rejected probably, I would say about 10:15. Everything started to sell off. And then you can see where we're at right now as far as pulling lower. We are still above the 50-day SMA at 442.49. So that's important to stay above that. However, we're kind of caught in between the 20-day SMA, which is sitting at 446. So it could be channeling today. You could be bouncing around in between these two moving day averages right now. So what I would say though, that this is a speed zone here. So here was Wednesday when Trump took the tariffs off, off the table, and then you had that big spike up, and so all the markets moved up. I think all the stocks and every chart looks very similar to this, where it was just one big squeeze higher. So that created a speed zone down here too. So if we do lose a bunch of levels here, I think we can come down, and these are another speed zone on the downside here. So as far as Tesla's concerned right now, this was on Thursday when Musk was speaking, and when Musk spoke, he was speaking about the future with Optimus, and what robotics is going to do, and how far along they are right now as far as having driverless cars out there without any safety mechanism in place. So that was Thursday for Musk, and the same thing here, big squeeze higher, and now we are in this speed zone here right now. So it's a good possibility if we lose this 50-day SMA today at 442.49. I think we come down here and test this. I would say this high from January last week. I would say this high from Wednesday, 438.20, and I think you can get there pretty quickly if you lose that 442.49 level, because like I said, this is a speed zone level that we have here. If you lose, and if you do get that downward pressure and you lose that 438.20 level, the next level I have here is a low set from January 16th, and that is, let's see here, the 435.30 level. So there are some levels down here that you can get some support down here. I do like the fact that Tesla is definitely pushing higher right now. However, still not getting that complete follow through. There are some open point of controls on the high side that we'd like to close out. This 455.09 is the first level right here, and then you have one sitting up at 478.35 is a level up on the top there. However, you do have an open point of control down low at 423.78. That's still open, and like I was saying about this speed zone here, there's another extreme speed zone down here. If we lose this 432.80, and that's 100-day, that's where the 100-day SMA comes in. So there is, if the market does pull back, there are some levels of support to be looking at. But if you start losing these levels of support, you have to pay attention to them, where they can then become, if you lose a level, that becomes resistance. So right now, pre-market, we're losing the 20-day SMA, which is at 446. So one thing to pay attention to, if the market opens up and then we start pushing into this 20-day SMA, and then price action shows you that it's rejecting it, that may be an area where you could short it and take it back down to the 50-day SMA. If you push through that 20-day SMA and then you hold it, then you can take it long. You push into that 449.08 level, which is January's high, or if you pop through that and you go through and you hit September's high, 450.98, or you even get through and get to Friday's highs. I'm going to mark Friday's highs actually, see if we get there. It's just 123. So that'll be a level if you push through today or tomorrow also. So, but I would say that because Tesla has earnings on Thursday, it's going to be extremely volatile right now. You could have $20 to $30 move on Tesla this week. So that being said, let's take a look at the 5-minute opening range trade that's going to be set for today. So if you see right now, I have over here on the left for my call price, which is going to expire on Friday. So we're 5 days away from expiration. and I have a 470 call price there. So right now, I'm $25 away from the price. Okay, give or take a few dollars, a few pennies. And the premium price is at $6. Normally, if I was that far away, this premium price would be a lot lower. But because we have earnings call this week, or we have earnings this Thursday, it's possible that Tesla could very well be at 470 by Friday. It could be at 500 by Friday, right? And on the flip side, I have 435 puts up here, and they're trading at $7.90. I could actually change this, and I am going to change this. So I'm going to start out at 430 puts. So this is actually, I could even go lower than that and lower the premium. Go 25. So now I'm $20. I'm $20 away from this strike price here, and the premium's going to open up probably higher than this 495 because we closed at 449.06. So we're $5 lower than where we closed. So this premium price is probably going to open up in the high fives, maybe even in the $6 premium. Now, because we could open up $5 lower, this premium price on the calls are going to open up probably in the low fives, maybe the high fours, right? And so I will be changing these strike prices as the market moves throughout the week, but it's definitely going to be choppy. And when you have earnings week with Tesla, it will fly around. So you have to, instead of clicking the button right away, you have to see how the option prices are going to move, because they will move pretty quickly. So like, for example, if it moves like $1, and even though we're we're 5 days away from expiration, it very well could move dollar for dollar, because of the volatility on the strike prices this week due to the fact that they're having earnings call this week. So you have to really pay attention to that. So I'm not really quick to click the button until I can see how they are responding. So once the market opens up and then you start to see, if it calms down and the premiums are moving normally, then that's when you can get in. Sometimes if you don't make a trade, sometimes that's a great trade. Anyways, that's going to be it for today. So again, if you're new to the channel, hit that subscribe button, smash that thumbs up button, like this video. And if you go down in the description, you can go and join the Discord community for live trading from 8:30 a.m. to 10 a.m. Central Time. Where I go over this 5-minute opening range trade, and I go over some other advanced trades as well. And it's all for free right now, so take advantage of it while you can. And if I don't see you in there, I will see everybody tomorrow for the pre-market analysis. Have a great trading day. Be safe. Be warm.